December 27, 2025. Elon Musk has just posted a significant response to the breaking economic news out of the East. This is not good. He is specifically referring to China's major new silver export licensing rules. This isn't a forecast for the distant future. This is an event occurring right now. Silver prices are currently experiencing a historic surge, with spot prices hitting a staggering $79.31 per ounce today, as the global market prepares for January 1, 2026, the day the new licensing rules take effect and the landscape for international industrial supply fundamentally shifts. This isn't about alarmism. This is about objective pattern recognition. In the next 13 minutes, I will show you why this single regulatory shift is a primary catalyst in what many are describing as one of the largest migrations of wealth in our lifetime. Go verify this yourself. The headlines are already hitting the wires, but the export ban is only the surface. What is currently happening inside China's industrial reserves is a far more impactful story. This is where the shift begins. The clock is ticking. Before we go deeper, a necessary reminder: I am not a financial advisor. This content is for educational and reporting purposes only. The world of commodities involves significant risk, so please conduct your own thorough research. What we are witnessing is a fundamental re-architecting of the global financial system. Public reports point in a single direction: a $5 trillion migration of capital. This isn't just about paper or promises. It's about physical sovereignty. Silver's total market value has officially surpassed $4 trillion, hitting approximately $4.05 trillion this week and surpassing Apple to become the third largest asset globally. Available disclosures indicate a massive shift as trillions move out of traditional debt-based instruments and into silver-backed wealth. This isn't just a price rally, it's a structural transition of the old economic model. The pattern is unmistakable. While standard news outlets may remain focused on daily volatility, the underlying movement represents a departure from the currency regimes of the last century. To understand how we got here and why global purchasing power is at the center of this change, we have to look at the three stages of the Great Silver Shift. Here is where the real story begins. Stay alert. The foundation of this situation is Phase 1. The inventory tightening. Industry disclosures indicate a shift so severe it has effectively reduced the available stocks in the East. In Shanghai, physical silver inventories held by the Shanghai Futures Exchange have dropped to approximately 819 tons as of December 26, 2025, recording a steady decline from earlier levels. This isn't a projection or a future threat. The physical stocks in major regional warehouses have already seen a sharp decline. According to data from international dealers, the results of this supply drain are being felt as silver reaches record levels, with spot prices soaring nearly 10% in a single day today to breach $79. The vacuum effect is real. These resources are not just being sold, they are being strategically stockpiled for domestic industrial use. Go verify this yourself. The warehouses that once anchored the global trade are now showing signs of notable exhaustion. When the largest industrial consumer on the planet begins to prioritize its own internal reserves to these levels, the global market enters a state of structural deficit. This isn't a temporary dip in availability. This is a structural void that cannot be filled by simply printing more digital contracts. The data suggests that we have moved past the point of replenishment. As the physical metal moves into private and strategic holdings, the price discovery mechanism is beginning to decouple from the paper exchanges of the West: stockpiling, restriction, transition. The triad of a terminal supply squeeze is now visible to anyone willing to look at the numbers. Phase 2 is defined by an intense and historic rally. This is where high demand collides with the reality of a tightening asset. China's primary silver fund, the UBS SDIC Silver Futures Fund, has seen a staggering 220% annual gain in 2025, a figure that highlights the sheer scale of the capital moving into this sector. Major market reports confirm that silver's market cap has now exceeded $4 trillion, creating a valuation gap that is forcing every major institution to reevaluate their portfolios. Scarcity and market momentum. This is the new reality. The rally has become so intense that it recently triggered a volatility-induced correction, with the silver fund hitting a 10% limit down on December 25th as the premium reached unsustainable levels of over 60%. But even with these corrections, the underlying trend remains upward. The clock is ticking for anyone observing this shift while the physical world reprices. This isn't happening in a vacuum. It is the result of millions of participants recognizing that the supply is no longer there to meet the exploding demand from solar energy, EVs, and AI infrastructure. Not a slow climb, but a significant revaluation. Available information paints a clear directional trend. The move toward silver is no longer just for the specialized investor. It has become a cornerstone of a new global wealth strategy. As a top-tier global asset, silver is no longer a commodity to be ignored. It is a signal. The expectation that prices can be managed while demand explodes has fundamentally broken. We now enter Phase 3, the export transition. This is the geopolitical endgame. On January 1, 2026, new licensing rules for silver exports will go into effect in China, requiring government licenses that effectively prioritize domestic supply for state-approved companies. Let me show you what's already begun that is often overlooked. This move has sent shockwaves through the global tech sector. This is why Elon Musk warned today that these new rules are not good for the future of global industry, as silver is a critical input for everything from electronics to green energy. By placing these resources behind a new regulatory wall, the global supply chain is being reconfigured in real time. This is a matter of pattern recognition. We have seen this logic before, where critical resources are prioritized to protect national interests at the expense of global supply stability. International reports confirm that the soaring prices ahead of this deadline are a direct response to the market realizing that the door is closing. Once those licensing rules are active, the vacuum effect we discussed becomes a permanent factor for the rest of the world. Resources are being sequestered and prioritized. The implications for Western industry are significant. Without access to these specific inventories, the cost of production for high-end technology will no longer be predictable. Go verify the regulatory filings yourself. The paperwork is already signed. The transition is underway, and many are still looking the other way. But here's where the situation intensifies. On December 25th and 26th, 2025, China's main silver fund plunged 10% in a limit-down event, following direct regulatory intervention to quell the frenzy. This wasn't a standard market correction. It was a calculated move to manage a market that was becoming unhinged from paper reality. When a government has to intervene to limit subscriptions to just 100 yuan, it's not because the asset is failing. It's because the demand is a direct challenge to the stability of traditional currency. They said the market was stable, it wasn't. And that's when the illusion breaks. This is no longer about a simple price increase. It is about the structural integrity of the system itself. By managing the fund, the authorities have acknowledged that the demand for silver is a significant factor in the established order. The wealth transfer is being met with a wall of regulatory resistance. But you cannot regulate away a physical shortage. The more the grip tightens, the more the pressure builds behind the scenes. It is an admission that the paper value can no longer fully contain the physical reality. Watch closely. What this means for you is a total decoupling of traditional financial news from physical reality. Silver is now one of the top assets globally, yet industrial users like Tesla and Starlink are already reporting supply challenges. Global prices are beginning to decouple from the local Shanghai prices, creating a massive premium that the West cannot ignore. Go verify this yourself. Look at the Shanghai premiums compared to the paper prices on the COMEX. Stockpiling, export restrictions, and price management. The triad is complete. This is the blueprint for a wealth migration that will leave the unprepared with digital claims while the physical metal remains out of reach. The pattern recognition tells us that when the physical metal disappears and the government intervenes to manage buying, the final stage is near. We are looking at an impending industrial crunch that will redefine the cost of everything. Available reports suggest that industrial demand is now vastly exceeding total mine production, and with the East closing its doors, that deficit will be felt in every sector. Industry disclosures indicate a shift in how corporations are sourcing materials, with many now bypassing traditional exchanges entirely. This is happening right now. The trend is unmistakable. The world is splitting into those who have the metal and those who have the promises. The question you need to ask is which side of that line you are standing on as the system reaches its limit. So, how do you navigate a world where one of the most valuable assets is being restricted? The first step is to recognize the shift before it becomes common knowledge. Don't wait for confirmation from the same sources that missed the inventory tightening. The pattern is clear, and the window to act is narrowing as the new export rules approach. This is not financial advice. It is pattern recognition. You must understand the difference between owning a claim on an asset and owning the asset itself. Public reports have made one thing clear. In a time of structural shift, a paper contract is only as reliable as the institution that backs it. And as we have seen, those institutions are currently prioritizing their own stability. Available disclosures point in a single direction, toward the importance of physical sovereignty. Whether you are looking at the soaring premiums or the dwindling warehouse stocks, the evidence is compelling. Do not wait for the media to tell you it's time to move. By then, the transfer will already be complete. The patterns are there for anyone with the eyes to see them clearly. The world we knew is evolving. The one that's replacing it is centered on tangible value. As the market cap of this metal remains above $4 trillion, we are witnessing a permanent shift in the global order. The inventory hit a 10-year low because the vacuum effect is maturing. The wealth is not being destroyed, it is being reallocated. It is moving from traditional debt instruments into the hands of those who recognize the value of finite resources. History shows us that these moments of transition are rare, and they are always significant for those on the wrong side of the trend. This isn't a theory, it is the mathematical reality of a finite resource meeting global industrial demand. The old system is fading, and what remains is the reality of the silver supply crunch. The clock is moving. The transfer is here. The decision is yours. Subscribe now to stay updated on the data points the standard media often overlooks. This is where the new chapter begins.